All right. Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of Money Mondays on the Note Close Show. Hopefully, you all are doing well, rocking and rolling along. It has been a busy week. Obviously, we have kind of a shorter week this week because obviously Memorial Day weekend, so a lot of people are taking off Friday. Hopefully, you have a very safe trip and get rocking and rolling on whatever type of summer vacation you're getting things to start off with. But one of the great things we're always excited about is seeing people close on notes and getting deals accepted. And this last week we had one of our one-on-one coaching students, Sterling W. James, in and done a great job. He closed on his second note. This one was just surprisingly still going to be a really great yield for it. We'll talk about later on. Only paid $8,000 for the note. It's only a $13,000 or $14,000 balance on it, but it's paying on time because the borrower filed bankruptcy. So it'll pay him about 120% return over the next 5 years, which he's pretty stoked about with everything on that. So that's always a good day. Had a lot of fun here. Took him out for barbecue. Took him for some good Mexican food, and made sure he got the good royal treatment while being here in Austin, Texas. But the big news is that we've got our responses back on our offers that we submitted after the workshop this past couple of weeks ago. Now, for those that know, we had a tape of 201 non-performing notes that we could cherry pick from a hedge fund. We got bids in from quite a few folks. I made a lot of offers. So we submitted 79 offers, and we ended up getting 52 of them accepted or countered. So we're pretty stoked about that. I want to go through that with you a little bit to walk through kind of that process, the numbers, the things like that we're pretty excited about. If you haven't gotten a response back from me via email, let me know, and I'll make sure and follow up with what your bids were accepted or declined or countered or stuff like that. I've already tried to do. We have one student who made 6 offers and got 5 accepted, so we're pretty stoked about that for her. Those are performing notes at about an 18 yield. Another guy get another accepted should be about a 20 yield as well on one note offering as well. So just it's kind of Christmas come Memorial Day, mid-year, not quite mid-year, but pretty close to it. But anyway, let's go through these numbers on these 52 because I'm ecstatic about this. I was working on this stuff yesterday, pulling updated photos of the properties. We've got it out to the VA to pull comps on some of the stuff. I mean, when we got the tape in, the values were old. They had older values on it, like 4 or 5 years old. So we all know values have increased quite a bit over the last 4 or 5 years. Of course, their balances were their legal balances that were showing was one number which we were pretty happy with. And so our offers came in because some of these were lower values. We had to make lower offers on these because these were on the tail end of the tape. And by tail end of the tape, they were on under the last 15, 20 years. Some of these have been modified, forbearance agreements, so those is extended. So we're really waiting to see when we get those updated payoff statements where each asset is at its process. But even like some of these assets were so like there's a couple ugly properties in them. I'm just gonna tell you that ugly properties that I knew that they didn't want, but I would have been happy taking it over just for the lot. Right. So I made some lowball offers that I planned on. I'm like, well, I know they want this off their tape. I'll just make a ridiculously lowball offer on this because I'm justifying my lowball offer by making 77 other great offers, right? So we did it. We got a couple of lowball offers accepted. One for as little as $100. Yeah. Now that property is Indianapolis. It needs to be completely rehabbed. It's not vacant. Another one made an offer for $1,000. It needs to be completely rehabbed, but we're not opposed to that. And what we'll either do with those is we'll just wholesale those off to local investors or somebody that wants to take those over. It's completely fine, and make some money on those for wholesaling those. But we'll do that through our self-directed IRAs. To get it, under contract for 100, you flip it for $5,000 in that contract. You got $5,000 that goes back into your IRA. You just made $4,900 positive on a $100 investment. That's a pretty good day for your IRA. You know what I mean? So a couple of those that we're pretty stoked about. And of course, we got to pull title. We got to pull semi-updated values on a lot of stuff, and then check taxes and figure out all that stuff by doing a deeper dive in that. But we're waiting for the borrower's information so we can do a deeper dive in that. But anyway, so to give you a bit of the idea on where they were at. So 52 notes, okay? Let me share my PowerPoint here with you. So 52 notes approved. It's always a good day when you get stuff approved, all right? I'm working on a couple other notes. One's up in Massachusetts, another one's in Oxford, Mississippi. We had a student make an offer on the Oxford, Mississippi. They came back and countered at a number. We're waiting to take a look at where to get an updated BPO on that to see if it's worth our time to take that asset over. If not, we'll just cancel it, move on. There's one that's a foreclosure. It was a BK. They haven't made payments on it, so it's a ability to foreclose. So I'm waiting to hear back from an attorney how long it's going to take to foreclose on a property up there. And also in Mississippi, waiting. I think Mississippi's a relatively faster one. It's an occupied property. It looks like it's a college rental, and stuff like that. So there can be pros and cons to it, but we'll take a look at this. But anyway, these 52 notes give you a bit of an idea of the geographic basis of it. You can see there's the map as we batch geode these. Now, yeah, there's a couple in Texas, which is great, a couple in Florida, a couple in Georgia, South Carolina, North Carolina, a couple in Tennessee, like 2 in Memphis, actually, 1 in Missouri, 1 in Omaha, quite a few in Indiana, quite a few in Michigan, a couple in Ohio, and that's kind of the breakdown of it. So it's in states that we already invest in, okay? There's a mix of judicial and non-judicial foreclosures on this stuff. Now, we may even go back and get more accepted because my play today, I'll give you an example. I got an email in, when I get an email in, was Wednesday afternoon saying, hey, here's your counters, here's your accepted encounters. Can you let me know? And I said, well, I'm in the middle of, 2 days of Wednesday and Thursday with coaching, so I get back to you Friday. So, okay, I'll need 30 plus days for due diligence on this. And they said, okay. Well, because they're looking to move. Now, it took them 2 weeks to get back to us because the seller was kind of hesitant to even move on selling them. The seller sent it to the hedge fund sent it out, and then the seller was like, well, I don't know if I want to sell these now, which is not good, right? You do a little bit of due diligence, you're like, you want to get rock and rolling, but sometimes the seller pull back. Well, I don't, the fact that we got so many of these accepted already, and they're in a momentum, I'm willing to go back to the seller and the hedge fund and say, hey, what didn't you get offers on? I'll take a look at those. If you did get offers on them, I'll take a look at them and maybe willing to offer something on them to make it work for you. And that may be something that we could do, like do an option agreement on those notes and then move them and maybe get even a higher price for them. Okay. So we'll talk a little bit more about that later on. But anyway, these 52, all in the areas we buy, we avoided, Illinois. Okay. I mean, there's one on the border, Missouri and Illinois, but I'm not worried about that. It's pretty good. Since those are actually 2 in St. Louis. Okay. Georgia, the ones in Georgia are going to be funded with a self-directed IRA. So those aren't going to be an issue for licensing in that aspect of things. So everything else, I mean, Florida's going to be the longest foreclosure process probably on this. And that's okay because those 3 or 4 down there are actually performing. Okay. Indiana, it's got quite a few in there. Most of them are performing. A couple are non-performing. So that may be 9 months to foreclose on those, but I'm pretty happy about it. Now let's go through the numbers on this stuff. Now the numbers on the 52, 79 original bids, 38 were accepted right off the bat. I'm like, damn, I should have offered less. Okay. But when I made an offer, I mean, they were that 50% of the UPB or legal, 50% or less of the UPB and well below the fair market value. So 14, they countered, which we accepted. So it's at 52. So the sales price for all 52 on this is $1,004,000. Okay. Now, if you figure that, I didn't run that number, you don't have to be too smart to figure that that's pretty cheap, right? So 1 million, sorry, and $4,000 divided by 52. That's an average purchase price less than 20 grand. Okay. Now, there were some that are more than 20 grand. Obviously, that offsets when you have one for $100, another one for 1,000. I'm just tickled on those two. I'll share what those look like in a second here. But it's basically the estimated legal balance that they gave me, which I think is a little outdated, is 2.18 million. Okay. And then the old values based on their valuations or AVMs was at 2.2 million. Now we'll have to do a deeper dive on some of these photos. Have current photos look good. What we'll probably do to save on these, especially since there's a lot of these that are accepted bids, a lot of them are already performing, is we'll probably just run property inspection reports to drive by it to make sure what it looks like. Since we're buying it so low compared to the values of what I think they are and the payoffs on this stuff, we're sitting in a pretty good position. So basically, we're buying this as it sits right now at 46% of the estimated legal balance or at 45.6% of the old fair market values. And I think that number is actually closer to 30%. based on some of the numbers I quickly pulled yesterday and last night to take a look at where they're at. So I'm pretty tickled with this tape. Okay, pretty downright tickled. This is I mean, do I expect to get $2 million off these? Maybe not, because a lot of these are going to hold for cash flow, and that's the balance they're going to be at, and you're going to get that. Okay, but the great thing about, and some of these that you get to that will probably foreclose on, and I probably need to run some numbers on that stuff to see what they look like, but the ones that we're going to foreclose on, there's a potential to get a nice chunk of cash for the full legal balance. And if you don't sell it for the full legal amount, then you end up taking the property back and you can rehab it or get a higher price for it. Okay. So we're sitting there pretty good. So if all perform right now, let's talk about performance, because our first play on this is the cash flow side. So right now, if you were to get all 52 of these borrowers on track, that includes, there's 30 that are performance. So you have to get 22 of them back on track. But if all perform just with their bare minimum, it's $232,000 a year. Okay. You don't have to do a lot of math to know that's already based on, if they just all start paying on time, which would be great, but not all of them are, that would be a 23.2% cash and cash return. That's pretty good, right? Now, the last 12 months of cash flow has been $188,000. Okay. You look at the last 12 months of cash flow, it's $188,000. I mean, now the 30 performing, okay, their base amount to pay is 180. 180,872. Now, some are paying a little bit more each month. Some are trying to get caught back up. Some of these are in trial payments. Some are paying above what their minimum payment is. So that's an 18% ROI with just the performing side of this tape. Okay. That's just with the performing side. Now, I've pulled photos on 45 of them. And like I said, our goal is, hey, those that are performing, great. We just keep those performing. We just keep those. We buy those. We transfer them to our servicing company, and we just keep those performing. On the other 22, we try to reach out to the borrowers to get them back on track paying. Okay, you have the opportunity to get back on track and start paying something. Otherwise, we will start the foreclosure. Now, the fact that most of these are in faster foreclosure states gives us the opportunity to really start doing some stuff like the ones in Texas. If they're not paying, we're going to foreclose and either sell at the auction or get paid, or turn into a bankruptcy and get payment. That's the whole thing. Cash flow to deed loans, friendly foreclosures. Let's let you walk away. You're upside down. You get paid in a year or two. Let's have you walk away. If you won't play ball, then we'll look to foreclose. Okay. That's kind of the process that I see. Now, will you have some cash for keys? Will you get some people selling the house off? Will you get some cash paid in full? So yeah, it'll vary a little bit. But the great thing, you walk in to get 30,000. I mean, 30 perform. I mean, you could, if you borrowed $1 million at 12%, you're still getting 60 grand a year just off the performing side. That's a pretty good day, right? That's a pretty good day if you're borrowing money at 12%. That's a pretty good day. All right. Now, let's move on. Now, let's start looking at some of these photos so you guys can start seeing what some of the stuff looks like. So this one's in St. Louis, Missouri, right? Not a bad looking this is a photo from 3 years ago. We send a property inspection report by just buddy to drive by, make sure it looks good, get a lot of pride of ownership in that one. That looks right now, a lot of these are not big homes, but they are, $100,000, $200,000 in value. Here's one out in Indiana. It's kind of out in rural Indiana, but it's a home. It's got a barn. It's got a couple. This is on a 3-acre, 4-acre parcel. I'm like, in the middle of cornfields. My attorney, not my attorney, but my agent in Indiana says they can sell this stuff all day long. People are looking to get back out to the farms, right? Why not? Here's another one. This one's in Indiana. A great little pride of ownership out in Newcastle. I've driven past this area before. This is a photo from 2 years ago. Here's another one. This is one that's for $1,000 in Ohio, in Cleveland. Okay. It's in a nicer, it's not the greatest neighborhood, but it's also not the worst neighborhood. It's the ugliest house in the block, but I guarantee I could probably wholesale this for $5 to $10 grand to some local wholesaler to take it over and finish out the foreclosure and take the property back, right? Here's another one. This one is in Plantation, Florida, if I remember correctly. Can't really see it too much. I found a better photo. It only showed part of the property. But hey, it's a good looking property for what we're getting this under contract for. It's well worth it. And this is actually performing now that I remember. So I'm not really worried about it. I'll send somebody by to take better photos of this one. Here's one in Anderson, Indiana. All right. Like Anderson, flipped some property there before. Look at it. I mean, this is from 10 years ago. But somebody's got some pride of ownership at one point. Hopefully, it's still got a good looking photo when we send a property inspection report by. This is a property in Tennessee, Milan, Tennessee. It's a commercial property. It's a 3-bay garage that's in there. And when we get the full legal description of it, we'll make sure to see if it's attached to a property. But, you know, it's got a lot of stuff there. Somebody's got to live nearby there. So if anything, they clean it off and we end up with a nice commercial property, or hopefully they pay us in full and we get paid off on the number on this, okay? This one's in Chenansing, Michigan. Nice little house. This is from May of last year, so it's a year-old photo. Performing. Somebody's living in the property. I think they're living on the property. Get some pride of ownership, I believe. We'll take a look at that. This is one. This is the one. This is for $100. No, sorry. This is the $1,000 one in Indianapolis. It needs some work. You can see it's boarded up, but I was like, what the hell? Indianapolis is a hot market. We'll see if we can flip this thing for more than $1,000 inside of our IRA. All right. This is another one in Warren, Ohio. A lot of pride of ownership. This is from 2 years ago. American flag, great neighborhood, lots of value, lots of equity in this one. Here's one in Inkster, Michigan. Good looking property, a lot of equity on this one. I think this is one of our new coaching students has an offer on. Pretty excited about that. Here's another one in Dearborn, Michigan. A lot of pride of ownership. This is from August of last year, so about 10 months. You know, look at those flowers. A lot of the manicuring. Just a really nice little property. Here's one in Canton, Ohio. Not a bad looking property there. All right. You know, performing. It's going to be a good day. Be a good, I think, 18 to 20% return for somebody on this one. This one is in Azalea Park, Florida. It's kind of a duplex. Not a bad looking little property. This one is back to Detroit. Performing, a lot of pride of ownership. This is from 6 years ago. This photo, so you should be in good condition. I mean, we'll want to obviously send a proper inspection for it. The roof looks a little old, but it's paying. Borrows paying on time. Got some pride of ownership on this one. Here's this one is out in the middle of Marcus, Georgia. It's a mobile home on land on it, with a carport and a garage in the back end side. I think it should be attached, but this is a zoomed in photo from where we could find from it. So obviously we'll make sure this is the right address for it, but this is February of this year's photo. So hopefully it's the correct photo for it. All right. This one here is on the left. It's in Detroit, Michigan. Somebody's lived in the property. It's still performing. It's from a couple years ago. You got somebody that is rehabbing the other property. When we send a property inspection report by, hopefully we'll see that it's rehabbed and in good condition. This one is in Memphis, Tennessee, single family home right here with a red Jeep on it. You know, pride of ownership. This is a few years old. This one in the middle in Detroit, Michigan, occupied, paying on time. This one is in another one in Detroit, Michigan. This is a July 2022 photo. Make sure it's still good. From what we can tell, owner occupied, it's paying, and it's a pride of ownership. This is selling at about an 18 to 20 yield, if I remember correctly, is what we have in our contract for. This is another one that's kind of hard to tell if it was this house here. Based on what I can tell, this is Plant City, Florida. Looks like it's a mobile home attached to about an acre of land, which is fine by me. It's supposed to be paying on time, which is great. This one is in Kissimmee, Florida. Not the most desirable mobile home on a lot, but that's what this area is. It's got a lot of mobile homes it's a mobile home kind of community, and this borrower's paying on time, which is great. I have no problem with the cash flow. I would not mind owning that and either turn it into a rental or another owner finance deal there in Kissimmee, Florida. Okay, this one, St. Louis, Missouri. It's this photo here. The property is not the smeared image on the right-hand side or the blotted out one. It should be this one. This is from 2009. This is probably the one that I have the most concerns about because it's such an older photo. So we're going to send somebody out to take a look at it. I can't remember if this is performing or non-performing based on off it right now, but I think it was one of the performing ones. So if somebody's living in it and they're taking good care of it and it's in better shape, better photo, when we send somebody to drive by it, hey, we're happy to do it. And then you look at this one, June of 2023, this one in Silo, Michigan. A lot of pride of ownership. The flag, you got the scooter out there, you've got all the decoration. That's a nice looking little property. Okay. This one here looks almost exactly like this one in Toledo, Ohio. A lot of pride of ownership. Somebody's living on it, paying on time. Great to go. Back to Detroit, another red brick home there. This is from June of 2022. So not a bad looking little property. And that's the final. Oh, here we go. This one is in Forest Hill, Texas, which is up by Fort Worth. Nice owner occupied property. This is from about 7 years ago. May actually drive by this property later this week, but it's occupied. Somebody's paying on it, which is great. This one is in another one in Detroit. This is a photo from December of 2022. Good looking. Then we come to this. This is unit B, so it's the one in the middle unit. It's a condo. Out of this, we'll look at this in Florent, Mississippi, see what's going on with that one, but I think that's also paying on time. This one is in South Bend, Indiana, this house in the middle. They're not paying on time. This is an older photo from 2011. So I like South Bend. It's not too far from Notre Dame, but it's a nice looking little property. If we have a better looking photo with it, we'll gladly work with the homeowner to try to keep them in it. If not, then we'll finish the foreclosure process and go from there. Okay. And then this one in Cleveland. Look at this, East Cleveland, Ohio. I usually don't like East Cleveland, but when you see this, it's like, wow, they've got some pride of ownership. It sticks out like a sore thumb, this blue house, right? Nice property. This photo is from August of 2022. It's in actually a better part of East Cleveland. East Cleveland's got some rougher areas, but this one screams it looks good, provided that the current photo when we send somebody by, that it's a good looking property and it matches up with what we're saying, all right? And then you've got this other one, another blue roof. This one's out in Vienna, Georgia. A nice looking little property in the land, a lot of pride of ownership. This is from 2 years ago. They got a carport, not a bad looking property. They got that blue stainless steel roof on that thing. That's a 40-year roof on there. So we're pretty excited about that one as well in our IRA. And then this one is in El Paso, Texas. It's a nice looking little property performing. One of the students from the class made an offer on it, and I think it's accepted. So he's going to see about a 20 to 25% yield on this one. I think his offer is at 25, values at like 75. They owe like 48.50, something like that. So it's a slam dunk deal for him. And then we have this one in Weatherford. This is a triplex up in Weatherford, Texas. Weatherford's up kind of past Fort Worth. This is a photo from January of last year. I believe they're paying on time. If they're not paying on time, it's an opportunity to buy a note, foreclose, and have a triplex that's paying with 3 tenants in a nice area. It's fast to evict. And the value on this one is quite a bit. We'd probably end up selling this at the auction. Okay. If you're interested in getting involved, feel free to email me at scott@weclosenotes.com. If you're looking to buy a one-off note or something like that, we might have some opportunities for you on this to put your lazy asses to work. If you're looking for some performing for your IRA, or you're looking for a non-performing, please don't hesitate to reach out to me and stuff like that. We've got some of these deals. Our due diligence is just beginning, obviously, ladies and gentlemen. So obviously we'll be pulling title, checking taxes, and then pulling updated photos, sending people drive by for values. The thing is, with these balances being lower in a lot of cases, we're going to send people by. I'll drive by and look at another. There's one down in Universal City, which is in San Antonio. I didn't put that up there, ran out of time. Oh, I didn't have a photo on it. That was blurred out. So I'll be driving by that one probably Wednesday to take a look at that. So we've got some great stuff on this deal. I'm really, really excited about this. I mean, buying these at a spot where they're performing pretty good, it'd be pretty easy to get an investor in to fund the performing side. The non-performing side also, I think it'd be pretty easy to get investors to come in, fund those deals, or bring in a couple investors that you're partnering with and stuff like that. So you're creating an LLC, and you're being active participants along the way. But really excited about this, the opportunities involved with this. Obviously, like I said, we got to pull values, we got to do title, check taxes, look at the collateral files, and look at the payment history, make sure everything matches up, and we'll go from there. But think about this, ladies and gentlemen. If you go back here to the beginning of this, how many of you think about these numbers? Think about these numbers. It's a $2.2 million value at the lease side. Okay. On every one we looked at quickly, values are way above. All right. So I think there's a lot of opportunity here for everybody. If you're interested, please don't hesitate to reach out to us. There's some great deals on this, some great opportunities for us. But we're going to start reaching out to some of our one-on-one coaching students here in the next couple of days and get the ball rolling on how to make this a win-win across the board for a lot of folks. So if you've got some lazy assets sitting on the side, if you got an IRA or 401k that's sitting there that you're ready to put something to work, please reach out to me. I think we can make some win-win scenarios of this take place and happen and really just knock it out of the park. So great thing, ladies and gentlemen, you don't find deals like these all the time. This is obviously a fund that's trying to sell off their stuff. They're ready to get rid of off the stuff, and they're selling at a price that makes sense for us. So, like I said, email me, reach out to me, and we'll get the ball rolling, and see if we can't put some money in each other's pockets. All right, everybody. Any questions, any comments, any concerns from those that are joining me live on here? I guess it helps if I open up the chat roll for everybody, which I probably forgot to do because I was running behind. But these are you're starting to see more of this stuff come across our desk. We're starting to see more of this. I got another tape in yesterday of stuff in Dallas and Oklahoma on Friday afternoon. Some performing stuff and waiting on pricing on what it would be a good, what I think would be a good deal for some performing stuff. So anyway, these are the kind of things that we're seeing more of. We're seeing the opportunity. If you make one offer, that's great, but stretch yourself. These are some really great deals to get rocking and rolling, to put some good cash flow into your pocket. All right, everybody, go out, take some action, everybody, and we'll see you all at the top. All right, thanks again. Bye. Oh, somebody asked a question here. Scott at WeCloseNotes.com. Cord. No problem, Cord. Talk to you later. Bye.
Hey, real estate investors, this is Scott Carson. I'm known across the country as a note guy. For the past 20 years, I've been buying distressed assets, primarily non-performing notes on residential and commercial properties. And if you've ever wanted to learn how to dive in to start buying non-performing notes from banks, hedge funds, or other investors like yourself, then there's no greater place than to get the nuts and bolts, the A to Z, the 1 through 99 place to get started. It is our virtual note buying workshop. We've been teaching this class since 2010 on how to find, fund, flip non-performing notes, how to get banks to call you with deals that you can cherry pick. And no, you don't need millions. No, you don't need a lot of experience to start looking at non-performing notes. We get lists of notes from banks, hedge funds on a regular basis, not 1 or 2 or 3 or 4, but hundreds of deals that we can evaluate and cherry pick. Whether we're looking for performing notes or non-performing notes that we can get reperforming, or non-performing notes you can foreclose and take back, whatever your niche or whatever you would like to focus on, we can help make it happen at the virtual note buying workshop. It's a 3-day class. Our next one is April 18th to the 20th. It's actually online live via Zoom. You get signed up by going to notebuyingfordummies.com. That's notebuyingfordummies.com. Day 1 is all about how to find these assets. How do you find asset managers? How do you find lists of people to reach out to that you don't have to spend thousands of dollars on postcards or letters that you waste money on? We don't do that. Day 2 is all about raising capital and marketing and how to create a business that feeds itself, that you can do part-time, 10 hours a week, 5 hours a week, depending on what your focus is. We'll show you a game plan to achieve deal flow coming in on autopilot versus you having to send a ton of money. And also, we'll show you how to raise capital like nobody else does. And then day 3 is all about the flip. How do we structure deals? How do we evaluate a tape to find the deals from the duds? All right. We'll show you what vendors to use. We'll give you a 200+ page manual, contracts, sample forms, all the stuff that you need to be a lean, mean note buying machine when you get wrapped up. Now, yes, this is live April 18th through the 20th online via Zoom. Get signed up today. We'll send you the replays of the previous online workshop so you can start learning, start evaluating material, and get rock and rolling. And if for some reason you don't like our class, we have 100% money back guarantee involved with it. If at the end of the first day you don't like what we talk about, you don't think it's impactful, just let me know. We'll refund back your tuition, no questions asked. We don't want your money. We want you to become a note buyer. We want you to become a lien lord. All right. Like I said, if you're tired of dealing with toilets, tenants, and trash outs, you don't want to deal with renters, then becoming a note investor is the path for you. Everybody evolves into a note investor at some point, but there are plenty of opportunities out there. There are millions of non-performing notes that you can cherry pick. No, it's not all junk. It can be small value all the way up to $1 million homes or $1 million apartments for you. So much opportunity is taking place right now in the chaotic market that we see. And who's going to come out on top? Note investors will. So take the time, get signed up today, April 18th to 20th. Go to notebuyingfordummies.com or go to our website, WeCloseNotes.com, and sign up for the virtual workshop there. As always, get signed up today. We run discounts all the time. The cost of tuition is you plus your partner or spouse. So get signed up today at notebuyingfordummies.com, and we'll see you at the top.